Welcome to my new video. Um, in this video, I'm going to try to break down the trade I had on AUD/USD and explain the same process over and over again. I intentionally decided not to be boring this channel with different approach and so on. So I decided to just make it simple, repeat the same process over again, because I see no need in trying to teach what is not necessary. So I believe this channel will be helpful by the time you watch the video repeatedly and see how I approach different pairs with the same approach. So straight to the point. So this is the same process we are looking at, and this is what we've been looking at today. So this diagram represents what actually happens there in this space. Actually represent what actually happens there and how I was able to get the move in AUD/USD. This is AUD/USD pair. So, and this is 1 hour time frame. So as you can see, we've been bearish all the way following the daily time frame. We've been bearish. Look at it. Daily has been giving us bearish move from here. So daily has been giving us bearish move after our break of structure, change of character happened for daily. So we have been having bearish move and the market is still going down. So this is 1 hour. Going to one hour time frame, I want to see what the 1 hour is actually doing. So when I came, I saw this move. So the market was somewhere around here. So looking at this diagram, the market is temporary bearish. So then look at it. Market gave us this move, create inducement, come down. Then market went back to take out inducement and collapse. So this serves as an inducement. This serves as an inducement for us, and market went back, take the inducement, which makes this level to be valid as break of structure. This level to be valid as break of structure. So if you look at this, you will see that after we have break of structure here, market tend to go back for this inducement again. This other inducement that was created, because the whole stuff is market break structure, identify your inducement, then let the market take out the inducement, then position for buy or sell depending on the direction of the market. So inducement taken out, instead of market to respect this level, if you want to continue coming down, he actually violated this level and gave us change of character. So now in the overall downtrend, we had a change of character to the upside, and this is against what the daily time frame is showing us. And it's dangerous to trade against the flow of the river, the flow of the higher time frame. So what I did when I saw this was, I knew that this change to bullish movement is going to be temporary. It's not going to be long time thing, because it's moving against the flow of the daily time frame. So I was skeptical, and instead of me to buy here, I actually waited. I want to see whether this market will create a structure. For example, let me give you an instance. Let's say we are having a structure to the down like this, and a structure to the down. So the moment market violated this level that gave us change of character, I will not want to just jump into the market by buying here, because I know this is against the higher time frame. So I want the market to create a structure up for me. Then maybe the second attempt, then I can buy, because this first push up, this first movement like this first move that changed this is the structure in the bigger time frame, bigger loop. This move that changed the character here we are expecting the market to mitigate here and buy. Then I want to see another move that creates structure for me before I will now position for buy. That will establish that the market is sincerely ready to go in the opposite direction. So, but in this case, this is what I waited for. I waited for this. After we have change of character here, we are expected to buy from this level. But due to my experience in the market and trading against the higher time frame is not advisable, so I decided to wait here and watch the market fail this zone. Immediately market failed this zone, market confirmed to me that it has aligned back with the higher time frame, which is daily. So what I did was to now engage, because daily cannot be selling and I will be looking for buying in 1 hour. So I decided to trade in direction. Not that I can't buy, but it's risky. So not that we can't trade against it, but it's going to be a short term thing. It's not going to be, it's a temporary move, so which can cut up with you anytime. So you are not going to know when you are going to be stuck, because you are trading against the flow of the river or the higher time frame. So it's not advisable. So if you want to trade, go and look for what the daily time frame is doing, which direction is it facing. Then you can now go to lower time frame and trade in that. If you're using 4 hours for higher time frame, go and look for what 4 hours is doing. Then go to 15 minutes. Then you trade in that direction. If the market give you direction against 4 hours, you ignore it. You wait until the market change back, then before you engage again. So the time frames are, if you're a day trader, like let's say you're a swing trader, this is the correlation time frame that I will recommend or I will suggest. If you want to swing for a very long time and so on, you can start from weekly higher time frame and use 4 hours as a lower time frame entry. You can use daily for higher time frame the way I'm doing, and use 1 hour for lower time frame. Daily and 1 hour go along, weekly and 4 hours go along, 4 hours and 15 minutes go along. And if you now want to go to the lowest level, then you use 15 minutes and 1 minute. So I am not advising anybody to go below that. So that's exactly what happens there. So immediately I saw this change of character, I look for my inducement and look for my extreme level. Then I initiate this trade, and it actually gives me the result that I wanted. So let me just explain to you in the real chart, so that you'll be able to see. Okay, don't let me clear this. So that you'll be able to see what exactly we were looking at. So look at it. Let me start from here. Market was bearish. So just for this video purpose, market was bearish, and we had a kind of movement here that creates break of structure here. But because break of structure happens here like this is the break of structure. So this high rests like a liquidity, because this market do not create inducement for us. So it means that liquidity rests above this high. So, and you can see market went back and took out this. For example, this, like, let's say the market is coming down like this, and maybe, okay, sorry, let me use this. Let's say we have a movement like this. Market took out this level and came back without creating any inducement on its way coming down. It means that this level, there is a liquidity there, which market is likely to go back and take, then before you continue its movement to the downside. So if you are trying to sell here, this is smart money trap. Your money will be taken because the liquidity is resting above it. So this high serves as inducement. This is our inducement for this structure like this. This is our inducement, this level. So, but immediately market take it out. It's supposed to create another inducement, but refuse, which liquidity rests on this level. So we wait for market to take out this level, then we'll continue the same process. So that's what actually happens here. You can see that market did the same thing. Use this level as an IDM, as an inducement, and before you know it, market clear all the liquidity above there and came down. So gave us this. Okay, this is a break of structure. So look at it. We had another break of structure to the down like this. After market closed below here, that's when our break of structure is confirmed. So now it means that we are ranging from this level, we are ranging from here to here. So first of all, what are we going to look out for? This level has to be protected, but immediately we have break of structure, we look out for last pullback, which we use as our inducement. So you can see this is the last pullback that the market generated, then collapse. So this level will represent our inducement like this. So now what are we looking out for after market breakdown? We look for inducements and we look for extreme. So this, for me, this is where I will be positioning for this market, for this pair to come back to. But unfortunately, market refused to come down there. So it created another pullback, which will shift our inducement from this level to this level, I think, if I'm correct, if I'm seeing it clearly. So look at this. We have an inducement here. No, it's not valid. This is not valid. So this is the inducement here that the market created. This is where we have valid pullback. Reason for this is because look at this candle. This is the candle. This candle is the last push down candle, and all these candles are inside it. Assuming that we have a scenario that one of these candles just push up like this, take the high of this level, then it means we have a valid pullback and come below. So this level will be marked as valid pullback. So I think I have to have a special one video on how to identify this inducement of a thing and valid pullback. So that's very important. So now you see market created inducement here and came down, and after that we had something like this. Market was coming down, create this pullback, sweep this low, and went back to take that inducement, and market collapsed. So remember what I said. On its way down, market refused to create any inducement in between. So assuming that on its way down, we had a pullback here and collapse, we can mark this as inducement. But market did not. So this high represents our inducement. So that's exactly what the market did. So we move this inducement to this level. So this inducement will be shifted to this level. Why? Because that's where the liquidity is resting now. We don't have valid pullback here. Okay, I think I can see it. This is a valid pullback here. So it means it's still valid. So we have inducement here. So this mark our break of structure because why? Inducement taken out and market closed below this level. So we have break of structure here. So it means that anything above this level, it means change of character for us. So change of character will be here, and as you can see, market make an attempt to sweep this inducement and give direction, but that direction was unable to close below this level. So it means that market need more liquidity or probably change the character, and as you can see, market change character. So now we had change of character. The overall flow is bearish. Now market is giving us bullish confirmation. So, but now we are not going to fall into the trap because we know that this bullish confirmation might be temporary. So after market push up, change of character, we were able to identify our inducement here. This is our inducement. Then market came back and took that inducement and closed above here. So it means that temporary market is creating bullish structure. And where is our range? This is our range. Anything that make market to close below here shows that we have change of character to the down, which will be my interest because I want the market to change down to the direction of the higher time frame. So, and as you can see, After this break of structure, what are we looking for? We look for our inducement. This is the minor, this is the major. We can use any of it. So we look for our inducement like this, and as you can see, market came to the extreme. Because I don't want to trade in opposite of what the higher time frame is telling me, against the higher time frame. That's why I ignore this setup. So, and as you can see, it was a move. Market reacted from this level and came back again and sweep this low. This is not change of character in the first attempt, because market refused to close below it. This is what we call external liquidity sweep. And as you can see, is after external liquidity sweep, market do what? Market boom and move up. Sure you understand. So, but this is not our trading setup. After external liquidity sweep, market gives a direction. But look at it, until market close above here, that's where we have another structure confirmed, which we represent break of structure. But in this scenario, what do we see? Market only sweep this high. It refused to close above it. So it means that market is not having that momentum, because when you see liquidity, the same thing that happened, market swept this low and gave direction. When you see something like this in the major low, maybe in the range, is a sign that, let's say this is our high, this is our low, market sweep this high, is a sign that it's going to up. If you sweep this up, it's a sign of weakness that it might come down. So those are the little things you pay attention to. So immediately I saw this, all I want is for this market to change character to the down, so that we align with the selling movement of daily time frame. So for this change of character to be confirmed, market need to close below here, because this low was the one that swept this change of character. So it means that for anything to close below here, then we have change of character. And as you can see, after market swept the up, it came back for the down, because this is a temporary pullback in daily, but in 1 hour, based on your 1 hour structure, it will give you change of character. But from my experience, I choose not to trade against the higher time frame. So I waited for market to change again to my daily time frame direction. For example, look at it. If daily time frame is giving you this movement like this, in 1 hour time frame, if this movement is, let's say this movement is big a bit, in 1 hour time frame, you will see something like change of character here. But it's just a pullback in daily time frame, which daily time frame will continue the sell. So in this place now, you don't want to stock in 1 hour by buying, because the overall movement is sell. So you wait for this movement to change to down, then you continue the movement. So that's it for this one. So immediately I saw this change of character. So I saw that change of character has been confirmed, which aligned with what I want to see in daily time frame. So what I did was to mark my inducements. This is where my inducement falls. Then what am I going to look for? I'm looking for entry at the extreme. So I look for the extreme. This is actually the extreme, that block. So now where it gets interesting is that I look like what is important is liquidity. Looking at it, this is a kind of liquidity too the market might target. So I just look at it that, okay, from my experience in this market do not promise me that I must mitigate my other block. Other block is just a refinement level for entry. What is important in this game is liquidity, is where the liquidities are, where the money are resting. Look at it, money are resting here, money are resting here. This one, why this level is high probability is because look at this liquidity grab on this level market. So market give that big move to the down. So he has to go and take money here. So liquidity is as the same thing as inducement. It's just the name that are different, the name that people gives to this stuff. It's all about liquidity. Nothing special about inducement. You can still say liquidity. So look at this. When I saw this and I look at, okay, market swept this level, gave direction, swept this level. Though I'm not paying much attention to this, but I just know it's there. So gave direction. So I say, okay, if that's the case, let me check how much pullback this level have done. I want to see if it's up to 60%. This has done about 75%. So, and I say, okay, if that's the case, I have to engage in this trade. So I put my limit order here. In the first attempt, I was looking at it, but the second attempt that the market came back, then in this level now, I had to enter the trade here. So because I know that this high must be protected by all means if this market wants to go down, and it's high probability that the high will be protected. High probability because of what? Is flowing in the direction of higher time frame. So I just look for my 1 to 3. I think I put my stop loss a little bit like this. So and I just target my 1 to 3 for this trade. Look at it, because I know that market is supposed to come and create break of structure here. So this is exactly what happened, and boom, market mitigates this. This is one thing that happen when you are in a trade. There's one thing for you to understand this concept, this approach, have this hedge. There's another thing to have the mental capacity to be able to trade it profitably. Look at this. I was in a trade and market gave me almost maybe 1 to 2 point something, and I'm only looking for 1 to 3. Look at it, market reversed and took almost half of the money, if not more than the half of the money that he has given me. But someone will be like, you should have closed the trade. I said, what about if I close it and market drops? So it's just like I shortchange myself. It make me indecisive. So I just want the market to do its things. So look at this. Someone will have been panicked that, oh, maybe this thing. If you have confidence on your hedge, on your approach, whatever market is doing, it's not going to be your problem. Because look at it. The concept is, whenever you master your approach to a level that you will understand that once you place your trade, markets will do some crazy things in between your take profit or your stop loss. So it's now left for you to understand that this is just market stuff. So whatever things, immediately I place this trade, put my TP here, I knew that whatever market is doing in between is none of my business. See, it's crazy that markets can move down like this, almost to your TP, go back, you understand, mitigate this level, and now collapse. So you need a mental capacity to be able to understand this, strong in psychology to be able to understand how this really works. And for you to be able to understand it, you need to have this in mind, that how much are you risking? 1% is not going to blow your account, or 2%, or how much percentage your risk tolerance can take. It's not necessarily supposed to be 1%. Anything your risk, you yourself know that you can tolerate and you are ready to let go in your account balance. So how much are you risking? Once you factor that out, the next thing is, are you playing according to your rules? Are you following your hedge? Once you tick that, yes, all my hedge align and I'm following my rule, perfect execution, bro, you have nothing to do than to just fold your arms and watch this thing plays out. That's all you need. Risk. Are you not risking more than what you're supposed to risk? Fine, I'm not risking more than what I'm supposed to risk. Am I playing my hedge? Yes, I'm playing my hedge. Once you execute your trade, just leave it. Let the market do its things. This is what will happen. If you lose, you only lose 1%. If market gets to this level and give you loss, you learn. If market goes straight to your SL, you know there is a valid loss. There is a bit difference between losing money and losing money in a valid way. When you place your trade according to your rules and you end up losing that trade, or trade end up going against you, it's called valid loss. But when you lose without following your rules, that's what is called lose. So if you're playing according to your rules and you have a loss, then it's a valid loss. It means that if the same things happen again, you are going to repeat it. And because each trade, each pair are unique, that can also give you money. Because you lose in this approach now doesn't mean that if you place the trade again you are going to lose, and because you win now doesn't mean that if you place the same setup again you are going to win. So you just have to factor the fact that you know your limits, your risk tolerance, and you are risking what you're supposed to risk, and you follow your hedge. That's why I choose not to. There are a lot of things I can teach when it comes to SMC, but I just decided to narrow it down to one thing over and over again. If I just want to be creating content, there are a lot of things I can teach people, but because I said this is how I trade and this is how I want to teach people, then that's why I come up with this idea that I'm not going to teach anything. I can teach you some kind of liquidity sweep, section, Asian high, all those section manipulation and so on. There are a lot of things I can teach, but I choose to just focus on one thing, one approach, so that anybody that comes to my channel will see that it's one thing repeatedly, and probably maybe that can give them confidence to study the approach and to put it into work. So that's just it for this guy. That's how I was able to catch this move. And this is the current situation of this market now. As of today, what's today's date? As of today, Friday 6th. So look at this. After we have break of structure, this is where our inducement is. So I've been able to identify my inducement, and this is to explain what I'm expecting in the market next. So this is my inducement. Market swept this inducement. This can be a sign that the market wants to go down, but this is not my approach. Where I'm looking to buy or to sell, where I'm looking to sell is this level again. So if market eventually come back here like this, then I will sell again to this level. So it's as simple as that, because this is where my extreme other blocks are. If market do refuse to get there, let's say the issue is market has swept the inducement, maybe market decide to close down like this. I don't have problem with this. It means that we are ranging from here, from this level to the low that the market created. So if market came back if the market come back from this inducement, then I'm selling here, because I know that this level must be protected. This level must be protected. So this is where I will put my limit order, and I will do the same thing over and over. Why? Because market created structure below here, and this is my inducement, and I'm selling at the extreme. So it's that simple. It's that simple. I'm not going to just keep trying different things. I've seen that this works. You just need to be consistent with it, study it, and personalize it. So that's it for today. And this is the trade that actually plays out that I trade. So this is the trade. So you see, this is my explanation, the one I explained here, and this is the trade that plays out. So the same thing, look at it. External liquidity sweep, change of character confirmed, inducement taken out. I enter the trade at this level, and boom, see, market just gave me the so in each trade like this, I don't really look at it as a win or as a loss. I just look at it that what does this trade teach me? What I learned from this trade is just follow your rules and believe in your approach. Trust your strategy over the market. Not that if you don't trust your strategy in the market, then whenever market tempts you, you fall into its temptation. So look at it. This is the concept. What I learned was when the market got to this level, market pulled back. I wasn't shaking, because I knew that you just have to do his thing. You just have to induce the law. You just have to systematically. Why this market pushed back was because some people were buying here. But market have to answer them. It's just like they are buying against the flow of the river, because they don't understand the direction of where the whole thing is going. So what the market do? Market responded to their buying, but temporarily, and came back and sell. So if they are still holding, maybe market will get to this level now, they will lose this trade. So it's important to know where the market is going. How you enter might not really matter, but when you trade in the direction of the higher time frame and where the market is going, you have high probability that your trade will play out well. So that's it for today. Thank you guys. Bye.